Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, September 14th, 2016. People, in case you haven't been paying attention, what we have seen lately with regard to action in the bond market has been downright scary. Now, what am I talking about? We have seen a massive sell-off in the bond market as well as the stock market. If you pay any attention to the mainstream media, there's a lot of guys out there trying to convince you that once cash leaves the bond market, it's going to go into equities. I can't imagine what is going through their heads when they make a statement like that. They probably don't understand the movement of cash through these markets or market dynamics. Because, let me put a perspective on this. So we understand the world central banks have been suppressing interest rates, going negative around the world. This has inflated the stock markets around the world. So what these people are trying to tell you is if the opposite happens, stocks will continue to go higher. Again, they're trying to sell you something. So the bond market has been sending, massive signals to the Federal Reserve. Hey, don't do anything. Don't even dream of raising rates 0.25%, or we are going to have a meltdown in the bond market. That's exactly what the bond market, more specifically, is telling the Federal Reserve. Understand, everything is hinging on this debt bubble. The bond market is debt. And if this would have continued, this sell-off would have continued, it would have been epic. As a matter of fact, CNBC, maybe it was even yesterday, was talking about possible leaks in the debt bubble. They're starting to talk about a debt bubble. Maybe they're watching my stuff. Well, I happen to know that they do, because I know some of you out there, and you know who you are. I will keep my mouth shut. Anyway. So look, here's the situation. I was on the phone with Greg Hunter, your friend and mine, yesterday, saying, Greg, watch the bond market today. Today, if the bond market continues to sell off today, we have a big problem. Well, today, cash is going into debt once again. So there's this little lull here we're getting. Not saying that we're out of the woods by a long shot, because we know what's going to happen down the line. But we got some bad economic news today. And what was that? We found out that import prices unexpectedly fell further than was to be expected. So what does that mean? It means that the Federal Reserve is nowhere close to hitting their inflation targets. And what does that mean? The Federal Reserve is not going to raise rates come next week. You got it? So what's happening? As I am doing this video, the stock market is higher. You got cash going back into the debt market. Do you see how easy this is? It's so simple to just look at the way cash is moving through the markets, and you can understand where it's all going to go. So that's where we're at right now. The market has, I believe, at least pretty much priced out now a rate hike come next week. The bond market was sending a signal, and I mean a big one, to the Fed to just keep their mouths shut and don't do a damn thing. Look, the market is running the Fed right now. It's not the Fed running the market. It's the market running the Fed, and the Fed knows it. They've created a financial Frankenstein. I've covered this over and over again. And now that they've done that, the monster that is the market, the debt market more specifically, is going to dictate to the Fed what they can and cannot do. So what does that mean moving forward? People, all this means is the Fed has no choice. The monster needs to be fed. The debt market is the monster. If the market does not get fed, the bubble will burst. It's going to burst no matter what, but the Fed is going to distort this further and make the monster even more powerful. You understand? So when the inevitable bursting of this bubble happens, because it's going to burst, is going to be worse than it is now. So what does this mean moving forward? The dollar is going to get weaker. Precious metals are going to go higher. The stock market is going to go higher. And we'll get some calm in the debt market. This is how this is going to play out moving forward. You know, if you're interested, I did a video earlier on my other channel where I talked about some of this stuff with the charts. I know you guys like charts. You know what? As a matter of fact, I'm going to put a link in the description of this video. You'll see a link to the evolution system. If you're interested in looking at a nice chart, you can see where the market appears to be going. It will give you a little bit more of a perspective on what I'm talking about here. If you're interested, I bet more than likely most of you are not interested. That's pretty sad, but that's okay. So what do we need to know moving forward? The Federal Reserve has got no choice but to feed the monster. The monster is the debt market. The debt market is dictating to the Fed what the Fed is going to do. It is not the other way around. And the proof, the absolute proof, is in what happened this week. It's been incredible. Now we'll see how this plays out moving forward. The Fed's hands are tied. In fact, they're hog-tied. Could you imagine Janet Yellen hog-tied? Well, that's what she is right now. Just get that mental image in your head just for a second, then get it out real quick, because it's pretty revolting. But that's a fact. Anyway, I think this video has been important. Should give you a perspective on what is about to happen moving forward here. Lots of opportunities to make this work for you. You need to be betting against this debt. Become your own central bank. You know what those mean. Acquire hard assets, gold and silver. Silver more specifically, most undervalued asset in the history of the world. As a matter of fact, I was talking to Greg Hunter about that just yesterday too. There is no asset on this earth right now that is more undervalued than physical silver. So you need to know that. There's also opportunities in this market, people, if you're looking to trade this, because there's going to be a bounce, and it's coming. No doubt about it. When the Fed gets out of the way and the market understands that the Fed is out of the way because the monster has spoken. The monster is the debt market. And that's the way it is, at least for a little bit. Excuse me, like Hillary Clinton right now, huh? But I do not have pneumonia. Neither does she, by the way. It's a cover story. I think you know that. Anyway, with that said, I will see you all soon.